good evening all. Ira Epstein, and thanks for putting up with my not putting one of these out yesterday. I am on vacation. I am feeling better. I'm getting over the COVID like so many other people that have had it. It hit my lungs terrible. I caught pneumonia and it put me down. So now I'm on the road to recovery and I am definitely doing better. But let's talk about the market. Today was all about the inflation number, and boy, was it a blowout. Instead of an 8 with it, it was a 9.1. I know of not one analyst report I read that was predicting anything over 9, in fact 9% or larger. They had gotten up towards 9, but 9.1, no. So what does it do? Well, it tells the Fed in its own way that inflation is still strong. Now we know, as futures traders and other traders, that there is a lag time in the real world between when things peter out and when they show up in Fed numbers. As a futures trader, I know that very well. You're trading futures all day, but it doesn't become the cash number until the expiration of the contract, right? So you're speculating on what that would be. Now, the cash market that follows the futures, of course, that's real all the time. But when you're trading back months, that's not real. That's what the elevator is willing to pay and lock in for a future delivery. But the Fed's looking at, hey, what are you bringing onto the marketplace to me today? And that's what's going on. So does this give the Fed the right and the willingness to go to a 100 basis point hike, just the way they did about a week before, if you'll remember, in June, and they started talking it? Well, the marketplace is talking it. If you go to the CME group, Google it, CME Fed Watch. There's a page they have. It gives you the probabilities as to what people are thinking. And 100% is suddenly becoming loud and clear. It's still primarily the 75%, but the 100 has grown. I'll tell you what would put the 100 up very solid. Get a good jobs number in the morning in terms of unemployment claims not surging. That would be a very good thing. So that would get the Fed the ability to go to 100 basis points. What we've already seen is the economy isn't falling apart. That should be good. If unemployment doesn't surge, it means the employment sector of the market is good. Now, we get our big numbers in banking tomorrow. Remember that. So in the banking, you're going to get JP coming out, Morgan, and we'll see what they do. The one fly in the ointment, I don't see where they're not earning money on deposits and other things, but the fly in the ointment, you have to pay attention, is what is everybody in the banks going to put away for bad loans, the reserves. They can create a loss there, but you got to read through the numbers. Now, if they're not making money from their deposits, where they're taking in money and paying out on hundreds of billions, less than 1%, and lending out at 6 or so, how could you tell me that doesn't work? Credit cards, we know that the numbers on them, number one, revolving credit and the like, are going up, so they're making money on that part. Brokerage numbers, we see that they've got a big business. They're making money with that. So I can go on and on. It's the bad loan reserve that's going to be the fly in the ointment, and hone in on that, because as one goes, probably a whole domino of them go. If we see they didn't put away enough to hurt the things, well, that's great. But if they put away a lot and they create a loss by it, learn this. That'll hurt the earnings today, and it looks bad on the surface. But unless those loans really go sour, just the way we saw last month, well, then the bank stress test says, you can give back some of that money. You have too much on your balance sheet, and boom, the dividends come out and the stock goes up again. So those are the things you're playing with. And playing a recession, which you have, in my opinion, and trying to be long banks is never an easy task to begin with. In Tesla and Twitter is what's going on here. So Twitter came out, sued Tesla, as you would think it should. I've read both sides of the arguments. I don't see the argument, frankly, that Musk has. I think Tesla's, the way that he signed that contract, I'm not an attorney, and please don't write me if you're an attorney that's it. I'm entitled to an opinion. And my opinion is I think they've got a pretty good contract. What I really think this is about, and I told it to you when he bought it, was the LVMH Tiffany deal, where LVMH excuse me, the same type of thing. Tiffany sued them, and a price at a lower number, not a big lower number, by the way, came about, and they had to buy it. In the end, there is a $1 billion walk-away fee. He could lose that and walk. I don't know that Twitter has the right to sue for damages. That good of an attorney I'm not. But he stands to lose $1 billion, or let's assume they drop the price. and instead of a 54, they go to a 52. I don't know. But, these are the things you got to think about. Okay, so let's go to the chart action because that's what we're looking at. In Google, and that's what we'll stay with. I'm going to probably go to one of the bank stocks tomorrow and do that for a week and a half or so. But you can see how you're swinging back and forth with a lower low and a higher high. That, my friends, is not a trend. The next thing that I look at on the chart is where the moving average is. Well, as you can look on here and see with me, you had been up like this, and all of a sudden you pulled back. And I was telling you, if it falls, look for support between the 50-day and the 100-day moving average. That's a logical target. So the market slid through it. Okay, but you still don't have a trend. You have a higher high and lower low. The market stopped right where it should. So Bollinger Bands. I had a gentleman call me today to take advantage of my Prime Day sale. And he uses an advisor that has made him a real lot of money. And he places his own orders basis on what this man says. And he says the one thing that seems to be missing is when they come out, and he thinks the Bollinger Bands will do it. So what I said is, where are you going to get something better than this for about $80, $83? Take the Spider ETF morning video, look at the Bollinger Bands. I said you also get to write me every now and then, hey Ira, would you look at this, tell me where I'm at on it, I'll create a 30-second video or whatever, send it out to you, and away you go. Of course, he subscribed. You have the same thing. Just move your cursor to the top of these pages at any point. You'll see an icon that appears up there. Give it a click. Go in. This whole offer, this Prime Special, I tried to tie it into Amazon. I give them all the credit. I just like, it is Prime. I think it's a great idea on their part. But in any case, ends at midnight, Chicago time, Central Time tonight. And then it's off. Computers are handling that. Okay. So, Bollinger Band called for a short-term top, and the market did pull back. I think you can see that. Then we get to the slow stochastics, and as you can see, this thing went too fast. Let me go. Sometimes you run into that. Remember, I'm out in Montana. It's not my high-speed lines in Chicago. All right. In the slow stochastic reading, the market got up here, got overbought when you hit the Bollinger Band. Come on, that's where you come out. That's the enhanced Bollinger Band course, and look at how you've pulled back from it. But I don't see a trend at work. Now on AMC, as I said, I expected a rally. I told you not to be short, if you'll remember with me saying I had experience with movie theaters. They tend to rally in the summer. This is when they get their money. Now this is the first serious challenge of resistance, the serious. It's the combination of the upper Bollinger Band and the 100-day moving average of closes. This is where the money's coming out of the market right now in the stock. They'll wait and see what it does. It either embeds or it backs off, and they'll be able to come into it at another time. But yes, I would be taking money off the table. In Apple, we talked back here that I thought when you hit the Bollinger Band area, that's where the pros would come out. Now, I also said something. Are you going to embed? Not there. Or day one. That's the first time you had both numbers over 80. Day one. Let me do this again. 2. Yesterday was day 3. Today was a buy day. And you're out of the market if the red line closes under 79 tomorrow, and you take half profit again up here at the upper band at 158.27 and hold being out if you get a reading under 79. That's what I would be telling my traders until that number closes under it. In Disney, you're back down to the lower Bollinger Band. It can't get out of harm's way. I don't think it's going to break out to the downside. I think it is caught in this pattern of the Bollinger Bands that have narrowed in and not going to give you much to do. I think the same is true of XLF. Do you not see how these bands have narrowed in? Think of this as a bottle on your stove that melted flat. And this is the neck of that wine bottle, because we're all winos. And here you go. And inside pressure is going because you left the cork on the bottle. It's going to break out one way or the other, but I don't know how long the neck wants to get before it breaks out. So I stand back. Whenever I see these patterns, I walk away from them. I've learned sometimes you never even get to the Bollinger Band. Just keep churning back and forth. And I used to wonder, why am I getting killed in here with my money and my client money and what's going on? Well, I've learned that. Okay, XSD, same thing to a degree. Trend down, bias down, but a rising Bollinger Band that is narrowing in. I don't see a big play out of any of that. Not the case in the home builders. So I'm listening today to the market wrap up on CNBC, and they're very friendly on homes. I understand their story. Their story is, number one, we may have peaked in the 10-year and 30-year bonds. If that happened because the economy is weakened and it's the front end going up so much, well, that's not going to shut off the whole housing market. We still have a supply problem. I get the argument, but that doesn't look like a buy signal on my work on the chart, other than, is it embedded? So let's you and I look. Not day one. Day one of embedding right here. Let me do this again. The cursor's gotten slow on me. Day 1, 2, and today is day 3. So the answer is the market is a buy on this pullback. You're out if you get a reading under 79, and you're looking for the market to come back up to the upper Bollinger Band. So I'm in accordance with them in the short term. On the energy sector, now this is an area where I think the professional money's covering shorts. And the reason is you're down to the retest of the 200-day average. That's what you're looking at right through here. And so close to the Bollinger Band. I'll let the other guy have the final dollars. The money's been made, and this is where you come out of this market if you were short. I have not, and the current pattern, liked it enough to be short. In the gold market, as you can see, lower highs, lower lows, the stochastics, well, they're still embedded. This tells me that tomorrow on follow through, not today, you wait because you made a lower low first, but if you're higher, I think the pros are going to probe the short side. They'll get out of this market if you get a reading over 21, but until then, I think they're going to sell it again. And I think they'll look at today's low, 160.06, as the profit-taking area off of that. So, but you get another dollar rally here. Could get to be a very interesting trade. I'll discuss it in my morning video, not right here. GDX, same thing. Until you lose the embedded reading, I think it's going to be a sale. I'll talk about that with my subscribers. I'm not doing anything in copper, but did copper embed finally? You watch with me. Day 1, 2, and today day 3. It has re-embedded and kept it. Each day it's making a lower and low. Good hard rally. I think the pros will sell the market. So something you got to keep there. There's no buys in the metals at all that I'm seeing. Now on AGG, this is the core U.S. aggregate bonds. I'm not surprised you're getting a rally. Today's high at 102.24. The last high in this market was 102.19. So the reality is these arrows, if you look at this low here, was 101.16, and this one today is 101.19. The truth of the matter is I've got the wrong arrows here. They should be blue, pointing higher. You have higher lows, higher highs. Again, you had 102.19, and today you have an outside day up. I think the pros will buy the market with a very tight stop under today's lows on pullbacks, looking to see if they can push it to the upper Bollinger Band. If you first make a higher high tomorrow, I don't think they'll buy the pullback in the market. In UUP, this is the dollar. So you're getting an outside day down, and I was watching Guy Adami and so many of the guys I like to watch on CNBC, the wrap-up at the end of the day, and, they're getting bearish. Not me. The fundamentals don't warrant it. Just because you think it's high is no reason to be out. As a futures trader, I have an edge over these guys. There is no such thing as high or low in futures. You learn that. You won't learn it till you lose. And once you lose, you realize it. But while you have an outside day down, take out today's high, and you're just adding fuel to the fire to go back to the Bollinger Band. It is the first time in a while that you haven't hit that band or been above it. So I understand what they're saying. I would join their ranks if you get a reading under 79, and then I'd look for the 18-day average to be hit, 28.19. Not that far away. Is it really worth being a hero for that? That's why I don't like anything I'm seeing there. So let's talk for a moment here. Our Prime Day sale. It ends at midnight tonight. So today is Wednesday. It ends Wednesday at 11:59 a.m. Central Time. And in theory, our computers will have been set to not accept the 50% off. Now, $7.95 is the intro price to try my morning futures. $8.95 the Spider ETF. Divide that by 2. That's what it costs to see it for 30 days, period. On our yearly subscriptions, we cut those in half. You have your choice. Whatever you want to buy. Up to today, I'm going to honor on my research. My full research in commodities, for example, is $60 a month. It's $30. And for a year, it's $600, and I'm cutting that in half. You're not going to beat these deals. They end. Don't look for them to come back on Labor Day or any of that. I'm not thinking I'm going to do that. This is the big sale I want to have. It's a loss leader for me in many cases, but I retain clients, and that helps build the business. All you need to do is go to our website at iraepstein.com under research, or follow the cursor, get up to the top up here, give it a click, and away you go. It's really that simple. I'm Ira Epstein. You have a great day. I'll see you all in the morning.